What is going on, everyone, and welcome back to Explain the Charts. Today is October 27th, 2025, and we are diving deep into one of the biggest stocks in the world, Apple, ticker symbol Apple. There is a ton of news swirling around, from the stock approaching a staggering $4 trillion market cap to incredible reports about iPhone 17 sales. We are going to break down all the current events and then jump straight into the charts to see what the price action is telling us. Let's get started by looking at the daily chart to get a broad perspective of where we are. As you can see, Apple has been in a very strong uptrend since the major dip we saw back in April. The news right now is overwhelmingly positive, with reports from Counterpoint Research suggesting the new iPhone 17 is outselling its predecessor by a significant margin in key markets like the US and China. This positive sentiment is what fueled the massive gap up and rally we saw last week, pushing the stock to a new all-time high of $265.29 on October 21st. This rally also saw Apple briefly surpass Microsoft to become the world's second most valuable company, just behind Nvidia. Analysts are raising price targets, and the broader market is feeling optimistic amid hopes of a US-China trade deal and a potential Fed rate cut. However, it's not all clear skies. There are still background risks, including potential EU antitrust actions and the ever-present threat of escalating trade tariffs with China, which brings us to a key moment on this chart. If we zoom in on the price action from April of this year, you can see the massive drop the stock experienced. The price plummeted from over $220 all the way down to a low of $169.21 on April 8th. News reports confirm this sharp decline was directly correlated with announcements of sweeping tariffs on Chinese goods, which heavily impacts Apple's manufacturing. This level, around $170, now stands as the most significant long-term support level for the stock. What followed was an absolutely ferocious V-shaped recovery over the next several months, showing incredible resilience and buyer demand. The market essentially shrugged off those tariff fears after Apple secured some exemptions. This historical context is crucial because it shows how sensitive the stock can be to geopolitical news. Now, let's bring our focus back to the full daily chart. After that powerful recovery, the stock consolidated for a bit before this most recent surge. The primary driver here is the iPhone 17 hype, which culminated in the breakout on October 20th. That day, the stock gapped up and closed over 2% higher, clearing the previous all-time highs from December 2024, which were around the $258 mark. This previous peak around $258 should now be considered a potential support level. Currently, the price is consolidating just below the new all-time high of $265.29. This consolidation is forming a tight range, and it's happening right before Apple's Q4 earnings report, which is scheduled for October 30th. This is a classic sign of the market pausing to digest recent gains and await the next major catalyst. To get a better look at this current consolidation, let's switch over to the 1-hour chart. Here we can clearly see the trading range that has been established over the past week. The ceiling, or resistance, is firmly at that $265.29 all-time high. The floor, or short-term support, has been established around the $258 to $259 area. The price has tested this support level multiple times and has held up so far. Volume has been tapering off within this range, which is typical for a consolidation pattern. Traders are essentially in a holding pattern, waiting for a decisive breakout or breakdown. A sustained move above $265.30 would signal a continuation of the uptrend. Conversely, a break below $258 would suggest a deeper pullback is likely, with the next target being the support zone around $255. Now, for an even more granular view, let's look at the 15-minute chart covering the action from October 22nd to the 24th. This time frame really highlights the choppy, sideways price action as traders await the earnings news. We can see the sharp drop on the 22nd, followed by a gradual grind back up through the 24th, ending the week on a strong note. However, the price remains trapped within that broader hourly range we just identified. This intraday action shows indecision. Neither the bulls nor the bears have been able to take control. This further reinforces the idea that the upcoming earnings report on October 30th will be the decisive factor for Apple's next significant move. Okay, let's pull back to the daily chart for our final summary and outlook. So, what's the verdict? The bullish case is strong. The company is seeing incredible demand for its flagship product, market sentiment is positive, and the stock is showing immense strength by holding near its all-time highs. A fantastic earnings report and strong forward guidance could easily propel the stock through the $265 resistance level and push it towards the $270 to $275 range as it marches towards that $4 trillion valuation. On the flip side, the bearish case hinges on a potential sell the news reaction. So much good news has been priced in that anything less than a spectacular earnings report and blowout guidance could disappoint investors, leading to profit-taking. Geopolitical risks also remain a wild card. Let's recap the key levels to watch. Immediate resistance is the all-time high at $265.29. Short-term support is the bottom of the current consolidation range, around $258. A break below that brings the next key support at the former all-time high of around $255 into play. Here are my unbiased predictions. I believe there is about a 60% probability of a bullish breakout post-earnings. The momentum from the iPhone 17 sales seems too strong to ignore, and a positive report will likely trigger the next leg up. This becomes much more likely if we see the price holding firmly above $260 leading into the report. I'd assign a 40% probability to a bearish pullback. This scenario would be reinforced if the stock breaks below the $258 support level with conviction after the earnings release. In that case, we could see a quick drop to the $250 to $255 zone. The most important thing to watch for is the market's reaction to the earnings call on October 30th. Look for volume on any breakout or breakdown to confirm the move. And that wraps up our analysis on Apple. Remember, this is not financial advice and is for educational purposes only. Always conduct your own research and make investment decisions based on your own risk tolerance. Thanks for watching Explain the Charts. Don't forget to like and subscribe, and we'll see you in the next one.